Hi everybody, I'm Steve McDonald and this is your Investors Daily Edge midweek market comment. In focus today, a former member of the White House team is calling for no changes to Bush's tax cuts. The exception to a range-bound market, another stimulus bill, boy am I surprised, a prediction for the dumb money, and look for the euro to move up, and of course a slap in the face award. Peter Orszag, a former member of the Obama White House team, has called for a continuation of the Bush tax cuts for at least another year. Thank God somebody's thinking. It seems he's the one person in the White House who understands that 9.6 unemployment and an economy that's still slugging its way through the trenches, the last thing we need is to increase taxes on the one segment of the economy that actually invests in it. And that's people who make more than $200,000 a year. This will really shock the White House. Orszag says that tax cuts do in fact spur growth. Can you imagine? Maybe there's hope. A range-bound market, we're in one. But despite the run-up last week, most credible analysts are calling for a range-bound market for the foreseeable future. Now, the exception may be before November of this fall. Remember, there's an election coming up, and it looks like it could be worse for the Democrats than 1994 was when they lost control of both houses. What does this mean to us? Invest on the rumor. The market sees this possible shift in power as a positive, and stocks should run up on the belief that the very anti-business Congress, or at least a perception of an anti-business Congress in the White House, is losing their grip on power. However, once the Republicans actually have control, there will probably be a big letdown phase when it becomes apparent not much is going to change. So buy and sell on this thing before the election if you plan to play it. Before the election, don't sell after. Another stimulus bill. Oh boy, this is what we need. As predicted here at IDE, just in time for the election, a meager $50 billion injection is being proposed by our dear president. Well, if $800 billion didn't do the trick, Mr. Obama, this is sure to start the economy now. The problem, as I've been saying all along, isn't the stimulus, it's the people who are running it. Congress is totally inept at managing anything that has a dollar sign on it. As I predicted before the last stimulus bill was shoved down our throats, it isn't the amount so much as the fact that Congress and the White House could screw up a one-car funeral when it comes to the economy. They spend money where it is politically expedient, not where it will do the most good for the folks who are actually making this country run. That's you and me. Now, it doesn't matter. It can't pass either houses of Congress, and it's all smoke and mirrors, just throwing up a smokescreen before the election. Dumb money will be back. That's the prediction made by a couple of analysts. It's time for some brutal honesty. Compliments, of course, of several top-notch analysts. I wouldn't be brutally honest, would I? The dumb money will return to stocks when prices see a significant run-up. End of story. The average guy who's been running off the cliff with the rest of the herd into treasuries won't be back in the stock market until after a significant run-up in price. It has nothing to do with consumer sentiment, unemployment, or stability. It's all about dumb money needing to see a run-up in the price of an investment to believe it's a good one. It's always been that way, and for most, it will never change. I hope you're the exception. I know I've been banging on the table about what a good buy I think this market is. Now, I've been banging the table all year about this. Buy this market on a dividend basis. Get paid to wait it out. Collect good dividends from solid companies with international exposure until it gets back on track. Grow with this market. Don't fight it. The euro is up this fall, and it's going to move up some more. Scotiabank says, yes, look for more upside in the euro. Despite more bad news about the EU banks, specifically the stress test missed all kinds of weak government debt, Scotiabank says look for more upside in the euro and other currencies. I said the same thing about a month ago. Now, I'm not a currency trader, so I'm not going to try and give you an opinion on either side of this one, but Scotiabank's a good source. You may want to look at this one more closely. And the slap in the face award is about the JetBlue flight attendant who claims he was mistreated by a passenger and activated an emergency escape slide to exit the plane because he couldn't put up with the abuse. Could have walked off, I guess. But anyway, the award actually goes to our wonderful news media friends who dubbed this jerk a hero. They dubbed this guy a hero. He got more positive press in one day than Obama did when this happened. Well, it seems the company interviewed the other folks on the plane, and nobody supports the so-called hero's version of the story. It seems there was no problem with any passenger, and this guy very well could have just decided to do something very stupid and very costly. Way to go, network news weenies. Another really stupid call on their part. And of course, there's no news story there, not when the facts come to light. The networks and CNN don't seem to like facts that show them for what they really are. Anyway, we'll see you guys Friday with the wrap-up for everybody here at IDE. Thanks for being a part of us. I'm Steve McDonald. Thanks again.